本节目由生动活泼制作播出。
嗨，大家好，我是徐涛。最近很多听众会留言问为什么我不主持硅谷早知道了。最直接的一个原因是我去年夏天从硅谷回到了北京，创办了生动活泼传媒，来专门制作播客节目。所以一方面是我自己不在硅谷了，所以很多硅谷的采访是不能做的。另外一方面，我也把更多的精力投入到了新的节目中去，例如反潮流俱乐部，而且我也花了一些精力在公司管理啊，还有怎么让公司好好长大，制作出更多优质内容上。但我的 partner 丨教他还在硅谷，他之前是一个投资人，也是到了听众提起来我才想起来，虽然他已经主持硅谷早知道有一段时间了，但我还没有向大家正式介绍过他，这是我的错。丨跟大家打个招呼吧。
对，这个都是你的错，现在大家都在恨我。
很委屈。其实在过去2-3个月，我觉得丨是做了很多蛮优秀的采访的，其实比我做的一些采访都要优秀。
没有，谢谢。
在疫情期间，他是很早的采访到了疫苗行业数1数2的人物，麻省州立大学的终身教授卢山教授。然后原油期货首次跌破至负数的时候，丨也是第一时间熬着夜对纽约巴莱克银行石油化工行业的分析师罗浩做了采访。那一期出来之后，大家反响也非常的好，甚至我觉得他把硅谷早知道的质量又往前带了一步吧。
太不好意思了，我已经脸红了。其实徐涛一直也都是在不管是选题，然后我们之间其实有很多的沟通，包括这个约嘉宾，然后后期的这个制作全过程其实都是徐涛在整体把控的。音频也是徐涛第一个听，第一个给反馈意见的，公众号也全都是徐涛就像老编辑一样去给我们的小编们提意见和修改。
所以也非常感谢大家会留言说想念我啦，但是如果大家支持我的话，也请大家支持我们整个团队，因为我们做这样的分工是因为想要产生更多更高质量的节目。当然我也会时不时还是作为主播出现在硅谷早知道的，就像这次一样。然后我们其他的节目像反潮流俱乐部，我也是时不时会来采访，由我来担任客座主播。之后有了一些新节目，说不定我也会到处去客串。而且我还是在做独立的节目，声东击西还是独立于我的这个播客公司的，这个我还在做，而且大概率在那里我出现的频率是最高的，因为就是我自己的孩子的那种感觉。
其实我们也慢慢在试验一些商业化，这样我们才能作为一个公司能够活下来，并且我们希望能够给大家带来更多的好的新的节目，比如说是像反潮流，就是我们的一个尝试，后面也会有一些新的，请大家这个拭目以待。所以我们也会慢慢的引入一些广告主，但是我们保证我们不会让这些广告影响大家收听的感觉，我们也会尝试各种不同的形式，让大家能听起来有趣。不过如果大家有其他特别好的一些这个建议的话，也欢迎直接来告诉我们。
对，
或者是如果听众当中有广告主的话，也欢迎联系我们哦。
对，我们的邮箱是 ting@sheng.fm ting@sheng.fm， 然后其实也可以加我们的小助手申小英的微信号，他的微信号是sheng FM sheng FM 1阿拉伯数字的1。无论怎样，你们有意见，你们不喜欢，你们觉得很生气，或者你们很开心，都是可以告诉我们的，因为我们一直是非常非常珍视听众的意见。
对，我觉得这次挺不一样的，因为我们好像硅谷早知道还是一档蛮严肃的这个节目，所以今天
结果我们就这么不严肃是吗？好，那接下来严肃一下。欢迎来到生动活泼传媒旗下硅谷早知道第4季。这个世界因科技创新而巨变，那就请和我们一起在最前线观察科技创新所带来的变化、影响和机遇。言归正传哈，其实这一次丨是又做了一次非常棒的采访。疫情期间很多投融资都已经暂停了，但是在硅谷有一家 VC 的动作，它是非但没有暂停，而且是有一个非常大的举动，是募集完成了42亿美元的募资，那这个数字也是非常大的。它是分别注入到了旗下的3只基金，然后这个 VC 就是硅谷老牌的风险投资机构光速资本 Lightspeed Venture Partners。那丨这次采访的就是光速资本在硅谷的一位投资人叫 Amy Wu。
我刚刚和 Amy 在 Zoom 上连线，然后进行了这一次采访。因为加州这个疫情还没有结束，大家其实都还是在家里工作，
就也是为了方便一些更加习惯于中文的听众吧。在这里就请丨燕先简述一下他通过采访了解到的信息，那之后对采访的全文有兴趣的听众呢，是可以直接听后面的采访。所以丨燕，我们先具体说一下光速资本这一次的募资情况吧。
他们这一次是募集到了42亿美金，分别注入了他们旗下的3支不同的基金里面，有一些是稍微晚期一点成长型的这个基金，有一些是早期基金。因为在硅谷其实这几个月以来，因为疫情下面基本上大家都是没有在做新的一些动作，包括募资或者是新的投资，所以光速的这个信息就显得特别的振奋人心。
所以 Amy 有说为什么就是他们能够在这个时间点融到这么多钱呢？
其实首先光速也是一个一线的基金，然后他们在过去的成绩还是蛮亮眼的。我刚刚看了一下数据吧，然后也是这个福布斯杂志披露了他们在过去的这个10年里面大概是 3.6 倍的回报，然后并且是 1.7x， 就我们一般来说是这个回报已经是回馈给了这个 LP。 第二个是因为基金有不同的 closing， 就是它的封闭时间，就是当你在募资的时候，你可能有第一次的封闭，第二次封闭，一直到最后的封闭。他们最后的封闭这个时间就刚刚好是在美国股市暴跌的那个星期一的前面的这个星期五，所以他跟我说这个可能也是幸运吧。
所以实力又强又幸运。
对对对，所以他也观察到其实可能有一些其他的基金它是在 call capital，就是等于说是他在已经同意投资的这些 LP 签了文件的这样的一些这个 LP， 他们在让 LP 汇钱进来的时候可能会有一些延迟，然后可能会有一些的就是说那我可能不投了，这样的情况也在发生，但是他们作为他们来说是比较幸运的。还有另外一点，因为1/3的美国的养老基金都是他们的 LP， 所以这些养老基金来说的话，他们的这个基金池还是比较稳定的，所以还没有说是受到了太多的二级市场的这样的一个影响。
那他们在疫情期间有投出项目吗？
他跟我说第一季度他们投出来的是3个项目，一个是在中国，一个是在印度，然后一个是在湾区本地。在湾区本地的这个项目是叫 We， 我们其实之前有一期在到海外去我们采访的也是 We 的另外一个投资人，他是在天使轮的时候进入的。这个公司是做亚洲人的这个生鲜电商，送新鲜的这个果蔬到家吧，特别是在疫情的时候他们的这个数据就非常的好。另外2个公司是一个是在印度，一个是在中国，但他们2个有一定的这个相似之处，他们都是 AI 这个聊天机器人的这个领域，一个叫做来也是中国的，一个是叫做 Yellow 是印度的。
现在聊天机器人还能够有市场，
因为现在大家对网上的这个服务其实依赖性就更强了，致使其实在这种一般来说我们可能会有人工的接线生给大家做一些客服，但是慢慢的因为需求过剩，企业为了节省资源，他们也会希望能够用这个 AI 的聊天机器人来代替一部分人工。
也能够想象说之前的接线员可能都得在一个密集的办公室里边挨着坐在小格子里边接电话，但可能疫情之中这种情况就不能够有了，因为有保持 social distance。
看过一个文章是说当年 SARS 的时候，阿里巴巴其实大家都是在自己家里这个接听电话的，这些所有的这个服务生，对对对对对，会经常会背景有孩子哭啊，有乱七八糟这种背景的杂音，对，所以他们是看到了这个领域，但他跟我讲其实也不是因为疫情的影响，他们注意到这个领域也已经是有一段时间了，只不过是现在的数据可能更加的好看，所以他们就做了这样的一个决策，是投了这2家公司。
那些受到疫情影响的公司呢？就我理解他们肯定也是投了一些公司受到疫情影响的。
对，因为这个光速他们的投资领域的传统是在企业级应用，然后软件，然后是在基础设施这个方面有非常多的这个经验，但是他们从前面几年吧， 因为也引进了大概有1-2位专门是看这个消费领域的合伙人，所以他们其实也是投了一些像是这个 Epic 这个游戏公司，然后包括是那个 Lady Gaga 她的这个电商品牌叫做 House Beauty， 还有一些比如说是像是做这个电商家具的叫 Wayfair， 包括他们也投了像是这个 Calm， 就是那个做冥想的那个应用，所以他们
感觉好像没有受到影响，反而是利好的。
它其实是比如说是像这个游戏，然后是像这个做家具的这个电商，其实数据看起来是不错的，但是他也看到了有一些比如他们有投了一家电商是做鞋的这样的一个品牌，这几个公司就是不是特别好的，因为大家现在不出门了嘛，所以数据就会下跌的比较厉害。它这几个不同的领域的公司虽然都是这个面向消费者的，但也不能同日而语。
对，我看到现在其实还有一个可能性是觉得公司估值下来了，是大公司并购的好时机，他们有提到这个方面吗？
这个没有说是那么明显，我从这个过去的几年的数据来说吧，因为他告诉我其实在过去的2年以内，这个新的基金成立的大概有1000多家，然后这个数字其实是在历史上是创了新高的，特别是就是在 VC 领域的投资总额从2005年到2012年这8年加起来总和是差不多的，所以过去2年是市场是特别热的，这样就导致了很多的创业公司它的估值增加了。同样的在这个 VC 的竞争的时候其实也是比较激烈的，但是这个其实并不能代表现在的很多好公司它的估值就会下降，其实还有很多特别好的公司他们的估值是没有任何变化的，而且还是有很多的 VC 他们是抢着要进入这样的一些这个 deal 里面。但是你说如果可能在这个疫情之前做的一般般，然后也没有看到特别多的这个亮点的这样的公司的话，那他们可能确实现在是比较困难，可能就是要不然是我把疫情之前的那一轮的那个估值拿出来我再融，或者是有一些特别少的一部分他们已经在追求一些就要活下去，做一个估值比较低的这个新的一轮的募资，其实都有。
所以也是看到底是公司自己实力怎样，做的怎样。但我想疫情可能不太一样的是，因为有些公司它做得好，就比方说线下的零售，那疫情来了，这个并不表示它做得不好啊，真的就是运气不好。但这种的话，可能是不是大家也在这个时候就不太愿意去并购啊？当然线下零售这个可能不是个好例子啦。
他说在并购领域的话，其实这个对整个社会都是一个很系统性的影响。收购方的话，他也会在想，那我是不是也要开源节流？现在是不是最好的时机？所以他们也是在这个说，那我们等到第2季度、第3季度，这个疫情过去，大家恢复这个工作、恢复生产了之后，我们再看会怎么样。所以没有说是特别多的并购的这个案例在发生，大家都是在一个观望的一个态度。
好像我们看到的一个比较大的也是 Facebook 在印度收购的另外一家社交媒体，也是非常大的一轮收购。
但是其实并不是说是那种大规模的这个大家全都在收购，
就没有并购潮。
对对对，没有，完全没有到达这个时间节点。他跟我说的有一个特别有意思的地方是，美国的 VC 全都是在看中国的疫情之后的一些这个发展状态吧。对，因为我当时问他说，比如像是这种生鲜电商，你们现在投了的话，你觉得等疫情结束了之后，你觉得大家还是会继续用这样的一个服务吗？还是会回到疫情之前的这样的一个生活状态？他就说他们在非常密切的看中国的市场的一个动向，所以比如说是像游戏，其实游戏很多就已经恢复到这个疫情前的这样的一个流量了，所以他们觉得这个对他们来说现在不是一个特别好的一个投资的方向。但他们看到了其实食物这一块，就是生鲜电商的这一块，这个数据还是不断的在上升，因为大家还是不是特别放心去饭馆，通过这样的一些思考吧，所以他们才会投了 We 这样的一个生鲜电商平台。在另外几个方面吧，我觉得可能也可以给这个创业的大家这个分享一下，比如说是他觉得这个在疫情之后在线协作那肯定是现在正在增长的一个领域，在线的运动，然后健康，并且是在比如说是在线的一些服务领域，在线会议，就大型的这种会议，然后比如说甚至是这种演唱会，其实现在大家都想把人聚集起来的各种各样的这个服务怎么样把它搬到线上，这个是他们都在密切关注的领域吧。
所以听起来他们也没闲着疫情期间。
其实大部分的这个 VC 都还是在跟自己已经有的这个投过的公司在不断的沟通，然后帮助他们怎么样说是能够不死掉，怎么样活下去。他们自己也是一样的，他们这个旗下面大概有400多家这个公司他们投过的，所以其实这个量还是挺大的，每周都要跟这个投过的公司来进行交流，然后帮他们这个解决一些问题吧。他们一般建议这个公司需要有2年的这样的一个现金储备，但是其实没有那么多公司是可以做到这一点的。他说大部分的公司现在在他们的投资组合里面都是在可能12个月以下的这样的一个现金储备，所以基本上大家都开始现在这个阶段在募资了。
所以其实这个规则也可以就是建议到普通人是吗？就我们现在要应对不确定的话，你看看现在的储蓄是不是有2年的现金储备，按照你现在的生活方式。
他们是觉得疫情的影响吧，可能到明年都不一定能够结束，
所以他的这个2年的依据就完全是因为觉得余波可能会持续这么长时间，所以他做的这样子的预期，而不是说常规情况下企业需要2年的现金储备。
他其实是说一般来说其实就要建议大家是有2年的这个时间，但
这个
现在
之前在无论是在中国还是在美国，你要在账上趴2年的现金储备，在之前的高速发展阶段是不可想象的，对不对？一般说容易轮资能够烧个1年半，差不多是这样子，对于创业公司而言。
因为光速是在2000年互联网泡沫的时候创建的，所以他们其实也是经过了2轮的这样的一个经济衰退，然后又好，经济衰退又好。他跟我说这个其实经济衰退都各有各的原因，但是经济这个好的时候，这个牛市是都可能类似的，所以他们其实觉得在经济不好的时候也能发现其实创业的这种公司，他们不管是创始人他的一个性格，或者他们在做的这样的一个事情都是比较是反脆弱的吧。因为在这样的情况下面大家都是要避险嘛，做避险的时候创业本身是风险太高的是一个事情，所以你在这样的情况下你还想创业的一定是真的是对这样的一个事情是特别的有信心的。
他有提到其他的 VC 现在是什么状态吗？
像我刚刚讲的其他的 VC 其实更多的还是在专注于怎么样把更多的这个现金留给已经投过的公司，帮他们一起来度过难关。但他说其实也要看对正在募资的这些创业公司，也说你得看这个基金它现在是在他们整个一期的什么一个阶段。对，一般来说美国的基金稍微长一点，然后大概是7年8年甚至10年左右。那如果是在前3年的时候，或者是更早一点的时候，那可以想到他们现在现金是充沛的，你可以更多的去 pitch 这样的基金。但你可能在晚一点3、5年的时候，他们可能已经投出一半了，所以这样的基金可能会比较不容易来给创业者做投资。
听起来就像是光速在说，你看我们刚刚融了钱，所以你们应该找我们我们现金充沛。
但是也要看，我就说自从这样的一个远程的跟创业者聊的变化开始之后，有没有投新的就是之前没有接触过的公司，他说还没有。所以他投的这3个公司都是之前已经知道的公司，就已经建立了联系的。对于新的这样的完全不认识的公司的话，就是还是比较困难的。他说就很多这个新的他们在聊的公司会开门见山的问他们说，你就诚实的告诉我你投我们的这个几率会有多大，因为我们就是完全通过一个电脑屏幕来做这样的事情，你也不可能是来看我们的这个 demo， 也不可能来面对面的可能喝好几次咖啡。创业者会比较这个直白的来问他们，然后他们也只能说是这个比较更加透明更加直白的告诉创业者吧，就是我们可能还没有投资过任何一个这样子的公司，所以这个对创业者来说不是好消息。
对，是在中国可能状况真的是会慢慢好转一点，这算是一个比较乐观的信息吧。非常感谢打雁这次的采访，大家如果对本次打雁的英文采访原声感兴趣，那请不要离开，可以接着收听。但一个小提示是，这次我们是用 Zoom 远程录音的，所以嘉宾的声音音质可能不会像我们的这个音质这么好，那请大家多担待。
对的，我和 Amy 的这一次采访其实还是有蛮多的细节，我觉得会对国内的一些做投资或者是创业的伙伴们会有启发或者是借鉴意义，所以大家如果有兴趣的话，还是请收听我们后面的这个英文的采访。Welcome to 硅谷早知道 Silicon Valley Frontier Show. Today we have Amy Wu, partner of Lightspeed Ventures Partners, joining us. So we're here to discuss under COVID-19 and what are the impacts for Valley VCs. And under such depressing time, is there any new opportunities for startup founders? Welcome, Amy.
Thanks for having me on.
Yeah, so how are you? Tell me about is the COVID-19 kind of changed how you guys work lately? What's the day-to-day changes?
Sure thing. So we've been working from home for over 2 months now, and it has had obviously a massive change, across all the markets that we are investors in. We immediately had to look at our portfolio. We got a portfolio of over 400 companies in U.S., India, China, Southeast Asia, Europe, so across the globe, and take a look at what the impacts of the business are, whether they need more funding, help them increase runway, while actually closing investments that had been live since the beginning of this year, and continuing to look at new investments. But obviously, now that we can't meet entrepreneurs in person or visit their offices, we've had to adjust to that.
Let's talk about that. So face-to-face is really important for making decisions. How are you guys dealing with that kind of looking at each other through the screen? Does that build trust?
So we've made a few investments since the beginning of COVID, and I can talk a little bit about that. They have been relationships that we've started since pre-COVID. And we're still sort of learning how to make new investments where it has been virtual from beginning to end. And I think that's something that a lot of funds to do, getting more comfortable with.
Right. All the investment that you made in the past few months are previous known deals, not new ones.
Yeah, those are entrepreneurs that we've known for a while. So, the last month, I was able to close 2 investments. We led the Series B in Yellow Messenger, which is an enterprise conversational AI company in India. And the other investment was in a company called We. They're based in the Bay Area. They're the largest Asian grocer in the US. And we've also invested in a company in China and a few, Carta, fintech company, a few C deals. But I would say in all those cases so far, those have been relationships that we've started pre-COVID. But
right.
We continue to adapt to the times, and we're open for business across the early and growth fund. So they're definitely spending more time with our portfolio companies in the last couple of months. But I think there is funds really aren't making new investments at all and are super conservative. And but the fact is that there's a history of great businesses starting in bear markets. So if you look at in the last recession in 2008, 2009, you've got a number of companies like WhatsApp and Uber and Instagram and Slack that were all founded in that time period. And so these companies are typically founded with a really strong DNA of operational discipline. And you also have companies that are founded by a profile of founder that really have this almost irrational internal fire to start something, and they've really chosen the founder path for the right reasons. So I think there's actually a positive signal around a founder who wants to start a company in this environment. So we are definitely looking at new deals and continue to invest. But similar to a lot of our peer funds, in the first couple of months of COVID, we spent the majority of our time with our portfolio companies, and that is very different from I would say we always spend a lot of time with our portfolio companies, but that's increased in the first couple of months because there was a lot of work in helping almost all of them reforecast plans. They need to extend runway. If it's a company in the U.S., then there were a lot of pieces of the U.S. Stimulus Act that we helped them understand, working with them to raise bridge rounds and also new rounds of capital. Funds, I think, are in the different spectrum of bull versus bear in terms of how this market is going to react. And obviously no one knows the shape of this recession, but, we at Lightspeed do believe that the U.S. market is likely going to be impacted for much longer than the next year. And so, and both in terms of the economic damage of shutting down a large number of industries and also just, obviously the damage from the virus. And so we think that most of our companies are going to be negatively impacted, at least in the short and medium term. but there's going to be a small number of companies that are positive impacted. So a lot of work with the companies, and like in the last recession, I was with Insight Venture Partners then, and so got to see firsthand, what happens with higher churns, and also just issues with cash collections, and definitely these issues going deeper than what a lot of founders or their exec teams may experience or expect in the first couple quarters going into a recession. But that's we got a lot of execs and founders, and also a lot of investors that have only operated in bull markets. So there's a lot of learning all around. And so we're helping our companies through that.
Right, because you guys you guys been around for 20 years. I think you guys founded around 2000, which is the dot-com bubble, right? So you guys definitely had seen cycles. So is there any differences this time than previous bear market?
As investors and economists say, I think bull markets have a lot more similarities to each other, and every bear market looks different. And, we're in unprecedented times. We've looked back at a lot of the previous recessions to understand, the timing of some of these, temporary, we call bear rallies, like what's going on in the market right now, potentially. And when do you actually start seeing impact, on the consumer company side, on the enterprise side? And we can make guesses as to how that will impact our companies. And, but nobody knows. We don't know. The companies don't know. And I'll give you an example. So across I would say in our consumer companies, they get real-time signals on whether their top-line sales are positively or negatively impacted. So they're able to react pretty quickly. And in that case, given how rapidly the country's shut down, those are much rapid impacts than anybody has experienced in previous recessions. The enterprise side is different because, sales cycles are long, and in the last recession, I would say, for example, SaaS was impacted, but it was not impacted very, very much. And that industry actually grew through the recession. Now, enterprise, SaaS spend, cloud spend as a percentage of total IT budgets are much higher. And so we do think that there's going to be a negative impact there. Yeah, but I would say across our enterprise portfolio, they actually had pretty strong Q1s, and in most cases where they had good pipeline coming into the quarter, they did see, much smaller ACVs or landing contract values, I would say. And they're beginning to see some higher churn. But Q2 is where we're all looking to see what the impact is. And I think we're going to see a pretty large range of outcomes.
Got it. So back to the consumer-facing portfolios. So how are they doing? Is there anyone they're doing better?
Yeah, it's a good question. It's pretty fascinating. So to give you a little bit of context, we're investors in a few dozen consumer tech companies, and they're pretty diverse. So you've got gaming, subscription app category, we're investors in Epic Games and Calm. Then, direct to consumer, you got House Beauty, Lady Gaga's direct to consumer cosmetic company that's in the beauty space, and then Rothy's in the footwear space. And then you've got online food companies like Daily Harvest and We. And these companies are, a lot of them are negatively impacted, but then a good number are positively impacted. So if you look at, for example, gaming, and then, furniture, food, these are categories that are all accelerated, or, flat to accelerated. So on the massively accelerating side, you have, online food delivery and gaming. And then I think things like, people are setting up their work from home setup. So you've got companies like Wayfair that are actually doing quite well. But then you have categories like retail, so apparel, footwear, that's going to be down to varying degrees. As especially in the US, people, we have the unemployment rates at 15%, I think, in the last report. And so disposable income starting to come down. And so you see this dispersion in across a lot of categories in consumer, where some companies are doing well and others are doing much worse during COVID.
Right. I saw you guys also invest in Calm, right? So they probably has seen a lot of growth in the past few months because people probably have a lot of mental issues that need meditating.
Yeah, absolutely. I would say categories of online health, but then also like fitness and wellness. Those are categories that are doing well in this environment.
Got it. You said that you invest in Wee, WEEE, is a like Asian grocery delivery company. So is that because the crisis you see there's opportunity? But what do you see the product market fit after the COVID?
Yeah, we've been really thinking through that. What types of behaviors are going to continue to get pulled forward, and where do you see reversion? And actually, for that, we've been following the China market fairly closely because the China market is a couple of months ahead of where the U.S. is, just in terms of timing of shutdown and recovery. But I think one of the big differences is just how the duration of shutdown has actually really, really impacted some industries differently. So in China, for example, you see the gaming sector was very accelerated. DAU, MAUs were really up during, for example, February, but then they came back down to pre-COVID levels fairly soon afterwards as people left the house. But then you have online food continue to accelerate even after the opening up of the market because people continue to be nervous, I would say, about restaurant prepared foods. In the US, where you see much longer trends of shutdown, you also see these trends in gaming, for example, growing, but are the behavior going to be much stickier? More people are going to be going to these online events that are being hosted in a platform like Epic Games versus actually reverting back to pre-COVID levels. That might actually diverge from what's happening with China. And then in terms of online grocery, you've got this pre-COVID, there were under 10% of total grocery spend was online, and you see that just massively accelerating to across the board, larger companies like Amazon, Instacart, but then also more vertical players like, We and Imperfect Food and others. And that is a trend that we actually think will be long lasting. And so we're pretty excited about that category.
Other than grocery, what other aspect do you see the US startup could be like kind of looking into?
So talking about some of the other verticals, I would say that are experiencing COVID tailwinds, so they're accelerating, they're going to be in categories that everyone's looking at, like remote work, productivity products, obviously like Zoom and Slack, but also there's been a large number of verticalized, more specific startups that have emerged in those categories. Like I mentioned, online health, wellness, fitness, call center software, conversational AI is a category where we're seeing acceleration across a number of companies, and that's because incoming customer support volumes are much larger. People want to call airlines, insurance companies, or direct-to-consumer brands that might have retail presence before that people can go into in person where they're not now. And so those are interesting categories. Like I mentioned, I'm interested in areas where people's behaviors have really changed a lot, like events. Whether they're for work purposes, like conferences, or for pleasure, like concerts or, theme parks, like people going to Disneyland, that's a lot of disposable income and also company budgets. And so how will that shift? Will there be new virtual versions of that will, coexist with offline? And so, like, for example, what is the post-COVID version of Cvent, conference management platform? And I mentioned Epic Games, are you going to see virtual concerts on YouTube or on gaming platforms just take off? So those are areas that we're exploring and we're excited about. And outside of that, I would say they're also just categories that we've got long, 10-year thesis around. So, for example, Lightspeed's been a long-time investor in the infrastructure, technology, and security space. And there are 10-year thesis we have around CIOs and CISOs moving from, on-prem data centers to hybrid cloud, full cloud, and the whole suite of security infrastructure products that they're going to need to purchase in order to support that move. And, Lightspeed has had some of our largest exits in this category, companies like MuleSoft, Nutanix, and Zscaler. And so we're going to continue being excited about and backing the best teams in this category.
You mentioned that you made like 3 deals the past few months. What are those deals located?
Yeah, actually, in the last couple of months, I was involved with closing a deal in all three continents, so, or all three countries, I would say, like, in the US, India, and China. I mean, we've been long-time investors in Asia-Pacific markets, and more recently looking into Asia and Southeast Asia. And we are fortunate to get to work with our early stage teams in India and China. So India teams led by Basil and Dave Carr, and China led by James Me and Harry Han, who've been all of whom have been investing in those markets for well over 10 years. And so we've made over 3 deals in the last couple months, but in the last couple of years, we've done over 10 co-investments, in India, and we have 3 growth investments with our China team. And in China specifically, I can talk about, like the most recent deal was in a company called Laie, who's a leading RPA chatbot company based in Shanghai and Beijing. And we co-led their Series B with James Me from Lightspeed China, and closed the deal, announced the deal end of February this year. And then in India, like I mentioned, we had led the Series B of a conversational AI company called Yellow Messenger. And conversational AI in APAC, super interesting, which we're really bullish about, because the APAC consumer are a lot more comfortable with interacting with their brands on messenger apps like WhatsApp and WeChat. And so that is a really unique use case that are now, expanding beyond just customer support or sort of like internal company employee kind of Q&A, FAQ type of support. And it's expanding into sales and marketing and accelerating launching new products. So that trend is ahead of what we would see in the US or even in Europe and LATAM. For B2C companies and brands like a Domino's or a Xiaomi, et cetera, like they're seeing acceleration in those channels. And so there's actually a great pull that these companies are seeing in terms of enterprise companies wanting to adopt and implement more sophisticated messaging and bot communications with their customers and also with their internal employees. But I would say that the other use cases, like customer support use cases, maybe have slowed down a little bit in, depending on what category. I think in maybe B2B categories, and definitely internal enterprise use cases have slowed down.
So I've been using Instacart. There's no way for me to get customer support this past few weeks. It just they're overwhelmed.
Probably look into chatbot.
Yeah, definitely. So you guys normally kind of just co-invest with the Lightspeed local fund, right? Is that how you guys do it?
Yeah, that's how we typically do it. Because we've got about 12 investors on the ground in those teams in India and also in China, and they just have they have full coverage in the markets, particularly in the early stage, and they also know the community really well. And so but we have these large growth funds in the U.S., and so we work with our India and China teams. Particularly on growth deals where there's an opportunity to co-invest in a team that typically these, James and Harry or Basil and Dave have known for a long time.
So let's talk about the new $4.2 billion raise. So it was one of the best news I've ever seen for months, right? Because no one has been releasing any close of the fund for a while, right? So what's your guys' secret sauce? Are you guys been talking to them for a while, or tell me about it.
Yeah, absolutely. Some thoughts on that. Well, first of all, we definitely have a secret sauce, and that's Michael Romano, who's our head of investor relations and who orchestrated the race. So we're very, very lucky to have him. And but other than that, we're lucky. I think the Lightspeed has had a long history of early stage investing, and the fund has had some great successes and exits, and we've been fortunate to work with some great entrepreneurs for many years. And so, being able to raise the rounds of finance, our own funds have been definitely some of the fruits of that. But I would say, in terms of timing, we were just lucky. Nobody predicted COVID, and so we just happened to have had our final close on the raise the Friday before the stock market in the U.S. actually just dropped for the first time, I think right around the beginning of March. And that was just pure luck.
It will be really a different story if the final close is after that.
It would be more challenging. I mean, funds are still out there raising right now, but I think, just like a lot of funds are in holding patterns in terms of looking at new investments. I think a lot of LPs are also in holding patterns as well. Institutional LPs won't have a capital issue, right? Capital call issue. But I think for some newer LPs, smaller LPs, some funds that raise from them may actually have trouble calling money. And that's what we saw in the last couple of recessions. But to your point around, like not having that many funds announce their close, that maybe funds haven't actually announced some of the close, but if you actually looked at total capital raised, right, it's in the last couple of years, there were actually, in the last 2 years, there were actually over 1,000 new funds founded, which is a pretty staggering number. And because VC funds have 10-year life cycles and the capital is locked in, what this means is that there is actually still a lot of capital right now sitting on the sidelines. And we do see that like in the market. So funds are absolutely deploying capital. They just happen to be deployed in companies that are more, I would say, like they have great brands, these blue chip growth companies with growth stage companies with A+ experienced management teams. And those companies are absolutely still commanding premium valuations, raising large rounds.
You told me last time, sometime you kind of like run into other big funds. Are you guys seeing the same level of competition?
So I would say, the last 5 years in venture were some of the most competitive times for a VC firm to win deals, particularly in the best assets. Maybe more so in, for example, the US and secondarily in India, a little bit less so in China, which has seen some cyclical downturns, I think, in the venture market, both in terms of fundraising for funds and also fundraising for companies. The best companies have always had a fairly easy time raising in the last 5 years. It's just a bull market for the most, particularly in the US. And yeah, so like in that kind of environment, I'll give you one more statistic just to put things in perspective. There were more VC dollars deployed in the US in the last 2 years than between the period of 2005 through 2012, so 8 years combined. So there were unprecedented amount of VC dollars both in the market and being deployed. And what that means is that companies have experienced some of the highest valuation multiples in the last decade, in the last few years. And that's very, very competitive for us, because we're looking to return 3 to 5x money on money, or cash on cash sort of like returns for our LPs. And so where valuations are really high, that just means the bar for exit becomes super high. And so, and for those, the best companies, it's incredibly competitive. We might be in a competitive process with 10, 15 or more firms. In a recessionary period, definitely that cools down a bit, starting with, at some point, whenever the public markets are going to adjust again, even further than now, we're going to then see that trickle down into private market valuations, probably in a few months' time. And so there's going to be we hope to see like a more adjustment in valuations, and as like smaller funds may back off, and also you see these hedge funds and private equity firms that traditionally are not in VC get into VC the last few years, so that's just more competition for us. We typically, in the last couple of recessions, they tend to go back into the core asset classes, so there'll be a little bit less competition from them over time as well, as we'll likely see.
Right. I mean, for the past couple of years, like the gigantic fund, SoftBank happened, right? So that's kind of like really changed the landscape for the Valley. And also the stock market has been like really booming for the past few years.
Yeah, just typical for any bull market, you've got players that typically don't invest in the VC asset class get into the VC asset class. And like I mentioned, that includes hedge funds, private equity firms, strategics. And then you've got these, again, like SoftBank is in a category of its own. And in addition to more your traditional VC funds.
Do you know what other like Valley VCs, how are they doing?
Yeah, I would say that there's a lot of our peer funds that are, maybe they're coming out and they're blogging about how they're open to new investments, but they're in a holding pattern. And certainly, and we'll be the first to say, we're also first looked internally at our own portfolio, and it's one of those situations where the larger the portfolio, the longer it'll actually take to work with them. And so these larger, multi-billion AUM funds are going to be looking more internally. But I think, all of us are right now figuring out the best way to make new investments in a virtual environment, as where we can't meet the management team. And I think you're going to start to see VCs across the board get more comfortable with that as we go get further into the summer. If you're an entrepreneur who's thinking about fundraise right now, I would say the first thing I would do is just have a chat with your existing investors, because there's still the majority of funds out there that are in holding patterns. And we also tell our entrepreneurs, you don't want to waste your time. Our founders are so busy with, managing through this crisis. And the last thing they want to do is just waste a lot of cycles talking to funds that just aren't interested in building new relationships right now or leading around. And so to really understand that, first have a conversation with your existing board members to get a sense of what they think your round might look like. And then have a few conversations with funds that you've had a relationship ideally with pre-COVID. And this is a little bit more nuanced, but it is pretty important right now where a fund's cycle is. So for example, if you know that the fund has actually raised fresh pools of capital in the last year or so, then they're early in their investing life cycle and they're going to be more enthusiastic around doing new deals. But everyone's sort of capital allocation may shift towards their existing portfolio and bridging the portfolio, or a lot of funds will. And so if you're talking to a fund that was caught off cycle with COVID and they're already well over 50% funds deployed, then they're going to be less likely to be doing new deals, particularly in the early stage right now. So it's just something to be aware of.
Yeah, that's a good point. So is there any suggestion for founders that have to go to new investors? Is there any tricks or tips for them? So from the new deals that you're looking at, so what are the things that you think they could be improved on, or anything that they're doing good?
Yeah, I think a couple of things. I think, in China, but then also probably in the next month or so in the US, the shelter-in-place policies will lift. They already have lifted in China, and you'll see that in a lot of other markets. And so going into the summer, I think people can start getting creative around meeting in person, whether that's seeing them across the street, each other across the street from each other. No, I'm kind of joking, but I actually think there might be creative ways to quote unquote meet with somebody that's not necessarily sitting across the table from them, but a step better than meeting them on Zoom. And so, and also, funds have got to, it's LP mandated new funds. We got to start deploying capital. And so again, every company is thinking through how to actually make new investments. And I think it will start opening up more when we get into the summer. But I would say, in the first conversation, some entrepreneurs just directly ask me, this is the first time we're meeting. Can you just honestly tell me what's the probability you guys could invest in a new company without meeting in person? And that could save them a lot of cycles and time.
All right, just be honest with each other.
Exactly. So
you guys think that enterprise software and also the infrastructure will be booming for China and India. So is that a 10 or 20 years, in the lag from the US market? So is that where new founders could be looking into in searching for new opportunities?
Yeah, it's a really good question. The B2B markets are very nascent in India and China. And by the way, we also look at consumer companies in Southeast Asia now too, but I don't see B2B there for some time. And it has to deal with just having a concentration of, I would say, of talent and experience, or product leaders, but then also go-to-market leaders that have been at previously successful software companies, building this culture of expertise. And we're starting to see that in both markets. And I think in China, you are going to see a first wave of SaaS companies potentially coming out to IPO in the next next few years, I would say. In India, probably another 5+ years behind that. But I think in the longer term, you will see more B2B companies coming out of these two markets. It's interesting because in China, I would say China B2B companies are selling to a lot of Chinese SOEs and a secondarily to China to global corporations. The India B2B companies, though, start off by selling to first Asia Pacific enterprise companies, but then all as an entry point into a global sale. And so they have a different go-to-market strategy, but definitely some interesting companies there.
Have you seen more M&A deals since there's probably less new funding opportunities? Do you see portfolio has been looking for acquisition opportunities?
M&A is fairly slow down to trickle, I would say, for the most part since COVID. And as you can imagine, I think a lot of strategics have a lot of uncertainty about their own businesses and their own guidance. And so as long as that's happening, and then also as long as there's a lot of uncertainty in valuations, as we see, valuations have not come down in a lot of parts of the public market. And so they haven't come down in the private market. And so these strategics are in a wait and see mode where they're going to be able to start finding really premium assets with lower valuations, probably in the next, I want to say 9 months plus time frame. I don't think we're going to see a lot of M&A activity in the next 6 months.
I see. So it's not as what people would think. The valuation will be lower and it will be ideal time for the buyer to pull a trigger.
Yeah, I would say that valuations have not adjusted significantly in a large part of the market.
A lot of SaaS enterprise software company, it's not burning tons of cash. They have very steady cash flows. So is that different from the unicorn that we have seen for the past 10 years?
Well, it's a good question. I mean, if you look at the U.S. market, and I would say that you see different trends in U.S., India versus China. In the U.S., the last 12 months have been fairly challenging for a lot of publicly traded consumer companies, particularly in e-commerce and marketplaces. You saw a trend that a number of these companies have been missing their earnings, particularly because they're just not seeing a ton of scale or efficiencies of scale in customer acquisition. And as a result, you've seen a lot of those multiples come down. Now on the enterprise side, like you rightly mentioned, you have some of the top companies in enterprise. You got Zoom, but then also, companies like Cloudflare or, Atlassian, a number of others that are trading at absolute premiums. And those premiums have barely come down in this market because investors just see that they continue to show earnings that where you got a combination of profitability or near-term path to profitability, very strong gross margins, very strong net retention, upsell rates. And so in that environment, there's kind of not a lot of drivers to compress valuations.
Right. So do you see maybe more investor will look into this space because it's more recession-proof?
The degree of recession-proof of these enterprise companies is very much up for debate. On the one hand, you've got, Robert Smith, head of Vista Partners, saying that it's investing in software is more stable asset class than investing in first lien debt, and then you've got other folks, and we tend to believe that unlike in previous recessions, again, SaaS and just and cloud spend as a total enterprise spend has just gone up so much in the last 10 years that this is very much in the crosshairs of CFOs in terms of cost reduction, assuming that we're in an extended recessionary environment. And in that case, you're going to get, it's really like the market is going to split into, are you a must-have product or are you a nice-to-have product? If you're a must-have product, if you're like, say, in the ERP category, CRM, cloud, or or in the infrastructure security, data security, and et cetera, then I think you're going to probably see again, perhaps like CFOs come and try to negotiate maybe a couple of months of payable forgiveness, and for new companies you're going to see like smaller deals being done, but you're still going to see growth, just slower growth than pre-COVID. And in other categories, I think you're going to see massive levels of churn and just companies missing bookings significantly.
Everyone has less budget, doesn't matter big or small.
Take your OpEx, go line by line, literally sort it by largest expense to smallest expense, and go line by line, start renegotiating every single line item. Everything's up for negotiation. So if we're doing that, then other companies are doing that to our companies that they have, purchased. And so we just like really struggle seeing an environment where SaaS enterprise is not, impacted as a whole. Now, on an individual basis, that'll look very different.
So how do you tell your portfolio what are the time frame for them to kind of prepare?
And again, I just want to reiterate and say that we just don't know. However, if you look at the last couple of recessions, enterprise spend did not recover for like 3 years after the low point in the market, after the beginning of the recessionary period. And so if you kind of extrapolate that, I think a lot of our companies initially were forecasting that Q1, Q2 will be impacted, but then there's going to be a rebound in Q3, Q4. And the reality is that more likely the impact is going to be 12 months, maybe 18 months, or even longer for some of our companies, and that's why we're guiding them towards having 2 years runway of cash on their balance sheet, so they can have that cushion. And at the point at which if things are looking fairly bad and they've got competitors running out of cash and going out of business, then well before 2 years, they are going to be in position to be aggressive and win market share in an environment. And I think experienced CEOs know that bear markets are great times to actually win a lot of market share, win a lot of talent in the market. And so they know I think their natural inclination is actually to cut deeper initially, more comfortable than a lot of first-time CEOs would necessarily, in order to be very aggressive later on in the cycle.
Right. Yeah, there's always opportunity lies in crisis. All right. Thank you, Amy, for all the insights. Yeah, it is a pretty depressing time, but we also see there's more opportunity coming, especially every consumer, every business. There are changes leads opportunity.
Yeah, absolutely. And I would just say that the market cycles will always be there. There's going to be bull and bear markets. I think the unique circumstances of COVID have led to just acceleration of large shifts in consumer behavior, in trends like online health or, ways that they're transacting, e-commerce, gaming, like all of the above. And it's not new behaviors, but it's actually just an acceleration of behavior that's already forming before. And so it will be very interesting to see what the landscape will look like, coming out of this, whenever that is. And so we're like looking forward to seeing that.
Yeah, thank you so much. Thank you for joining us today.
Thanks, Diane.
今天的节目就到这里。这期节目除了主播和嘉宾，也感谢我们团队的迪卡布里辛和 Luke， 他们在最短的时间内完成了节目后期制作。还感谢小爱，他是每次将音频上传到各个平台的人，他同时也是生小英这个账号背后的小伙伴。同时也感谢子珊和 Amanda， 是他们每次将音频整理成了文字，并发布在我们的微信公众账号上。如果大家想要长期关注我们，也可以订阅我们的微信公众号，搜索生动活泼这4个字就可以找到我们。也请您支持我们，例如在您所喜爱的音频平台上点赞打分，或者通过打赏的方式支持我们。打赏方式在我们的微信公众账号上以及网站声fm.cn shengfm.cn 上都能找到。当然也可以转发给您1、2位朋友们，让他们也听到这档节目。也请大家继续关注我们之后的报道。那我们下次节目再见。